It's Sunday, September 25th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting. I'm going to do a little R&R of Friday's market action and, more importantly, of course, what I think about the implications are for price action starting tonight and tomorrow. Beginning with the euro currency, again, I can't stress how much I think the euro currency is what I would consider to be a quote-unquote truly technically driven trade at this point. The market is clearly in a messy consolidation that it has been in for a very long time, and it is still my presumption that it's not going to change. I still like the upside of the market rather than the downside. However, in the context of what we're looking at, anything is a good trade if you can get a reasonably risk-reward. So I think we are still meandering here in some kind of a strange-looking B-wave consolidation, which should resolve to the upside in the sense that I suppose the next, I don't know, hard to say. It's very tough here. 80 points might be up or 100 might be up, but it's very dicey. So again, I think you could probably be a seller near 112.80 and see what happens. But I think the better play will be on the buy side if we can get back towards the 112.20, 11200 level for what I think will be a B-wave opportunity. But again, I have a clear vision of how I think this might play out, but I don't know how it's going to play out. Moving right on to the 10-year. Boy, this forecast is looking awfully good. I was looking for a wave 4 triangle consolidation pattern to set up here, and so far that looks to be awfully close to complete. One more swing down perhaps. Again, this will start to come unglued if we trade much below 130.25, I suspect. But at this point, this forecast for one more nominal new high remains unchanged. Looks like a shot for 131.08, give or take. And as I've been saying the last couple of days, that could be it for this rally here. I was just reading somebody else's work, and they were getting all bulled up on these notes. And I'm thinking, gee, we maybe been talking about the short side here. So we'll watch and see. If there's something more important going on here, the market will not stop at 131.08. It will accelerate. So if there's a big base being set up here, and I'm a little underestimating the upside potential of the market, then it should just turn back up and keep going. So we'll see what happens. Again, I think we are very close to what's going to be a top, and for the market to roll back over. Well, not too much to say about gold. The market hasn't really fallen away dramatically from its 76% retracement, but it certainly by no means has made any further progress. So this is just a very tough call. I really don't know what to say. We may or may not get another test of 1350, but I would caution that if the market starts to fall, it could fall pretty hard. So again, I don't like a lot of the technical stuff here. The RSI momentum divergence is pretty awful, but we don't trade the indicators. So if the simple truth is, if the market doesn't really do anything but go sideways for the next day or so, and it works its way towards this at multi-point RSI support line, then got to believe that whatever it is, it will just be bullish. So maybe this is a 1-2 and not an AB, and we're looking at a fourth wave. We'll be open-minded. Just have to follow this one up real time. So it's unclear at the moment what the next play in gold is going to be. But again, should this consolidation continue to be more sideways than anything else, that would be bullish. Well, the crude oil situation changed quite dramatically. I'm not saying this was anything spectacular to say that the market was supposed to make another new high. It actually did, and it probably shouldn't have, because it looks to me like it was a bunch of crap. But in any event, following the 5-wave decline, we noted the importance of the 62% retracement, and now all of a sudden things look just terrible. So maybe crude oil is a bust. Again, I'm willing to go with that idea for now. So I'm looking for a courtesy rally situation, a 62% retracement, somewhere near 45.75. I think we've got to be open to that as a possible setup for a bust. So we'll see. The risk, I'd say, is pretty clear. We take back of 46.70 or whatever the recent high here was, and things are obviously nowhere near as bearish and dire as this would be. So again, the one point I have to make is 5-wave moves are either the beginning of something or the end of something. So if that was the end of something, we are going to have a stealth turn here, and it would probably come fairly soon. And I would think under that scenario, prices would come roaring up through 45.15, 45.20, and just go ballistic. So probably drop just as fast from 46 to rally from 45 to 46 just as fast as they fell. So that would be the bullish scenario. Just about anything else I think is going to be bearish. Yeah, the net gas damage was too much to be consistent with an ongoing bull scenario. And while the trend in the market is still unfortunately up, and we have to be open to the market coming back at any point, I don't know what else to suggest here, but that if we do get a recovery, that we would be liking to sell into it. You know, it's just a very difficult kind of trade. This is not a impulse structure, and because of that, any of these breaks could turn out to be buying opportunities. And you know, I can only say that, you know, catching a lot of the lows was easier than catching a lot of the tops of late. So I don't know what to say about that. But I do think a recovery is likely, and somewhere between 302 and 307 would be where I think the market should stop, assuming it's not going to keep going higher. But it's very tough, and being on the long side of this thing at any point might be a good play. We'll just have to keep up on this one real time. Okay, we'll wrap up with the stock index futures, and frankly, right now, we don't have what I would consider to be any massive amounts of value to add. But the S&P did push through the 76% retracement and has subsequently come off. You know, for somebody who's bullish on the market, I would have to presume that they would be thinking somewhere between 2150 and 2145, which would be the top of this entire consolidation, ought to be support. And, you know, maybe that will be the case. I don't know. I just don't know. I'm open-minded. I'm not convinced that 2170 won't come out right away, perhaps early tomorrow or on Tuesday. But if we get too much more technical damage, it's going to be more a question of, gee, how much further can the market fall? And if it's falling, does that really mean anything? So unfortunately, I believe we are in what looks to be also a classic situation here, where we are probably looking at, by and large, very technically driven short-term trade, where you know, if a big order comes in, an algorithm could front run it. You know, it's possible. That's all I'll say. Something like that could be possible, and I don't know if the market can move dramatically, but you know, the big support level is actually ultimately somewhere in the vicinity of 2115 in the event that the S&P E-mini continues to move lower. And all I can say is we'll have to update this one real time, because it's hard to make much of the wave form of this decline. It could be very bad. I just cannot make that call right here and right now. What's encouraging, as I see it, is the market holding the detrended support, the falling support. So again, normally, I mentioned this the other day on a market that was rallying, when a market continues to bounce off falling RSI support, that usually indicate that this is a corrective wave as well. Okay, and then the E-mini NASDAQ, I think there's every indication that the wave 3 peak did come on that first assault of 4900, which failed, and now we are looking at a fourth wave shakeout scenario. I don't know how much further the market has to go. There are no rules or requirements about this one. I don't know that we're going to get to 4800. The conventional support line is somewhere in the neighborhood of 4830. So I suppose there's lots of potential targets of opportunity for this turn back up. The 38% retracement is somewhere in the neighborhood of 4820. So frankly, you know, this market could hold anywhere from 4830 to 4795 and still immediately result in a new high, because again, we need to keep in mind here that the first wave of this sequence was a pretty feisty one. It was well over 100 points in not too short order. So as long as we don't fall too much below 4,800, all we need is another 100 points to get a fifth wave rally out of it. So I've got to view this at the moment as a fourth wave courtesy dip scenario, but this is clearly a real-time update. There's a lot of things that a lot of ways this could play out, from a triangle to a quick slam. So the concept is a fourth wave shakeout, courtesy dip. Remains to be seen exactly where. So sorry this dragged a little bit long today, but this is Ron Feinstein, New Wave Forecasting. Sunday, September 25th, 2016.